Hey everyone, TNRI here, and today we are here at the Sendcloud Eindhoven HQ, and we are meeting up with Rob, the co-founder and CEO of Sendcloud. Let's do it. And with the Sendcloud, you are now one of the companies who are helping the e-commerce players to do the deliveries and shipments and all of that. And you are kind of like the perfect startup, I would say, for the Netherlands, because you started like young during your studies, then like you found the co-founders or also your friends, and then like you did the Accelerator, angel investments, regional fund, proper investments, and then like SoftBank and like I guess IPO soon. So This is like and you're B2B software startup with AI. This is like you are like the perfect Dutch startup. It's really cool. Well, not startup anymore, but yeah.
Thanks. Yeah, I don't feel like that, but I can imagine that it looks like that. So I feel that we, of course, we are there to help e-commerce stores to grow and to compete with the largest ones of the world, right? So with the Amazons, with the Bol.coms in the Netherlands, and we did quite some investment rounds. Yes, we did all the Accelerator stuff. It was also quite a nice experience.
Really cool. Yeah. And you yourselves are from Deurne, yeah?
Yes, I'm from Deurne. It's a small village in 20 minutes from Eindhoven.
Mm-hmm. Yeah, and were you and Bas like neighbors or something like that?
It's bigger than that. So there are more than 2 people in Deurne, but we met at high school. So in the second grade of high school. So since I think we were 13, or we've been friends ever since. So that's now 17 years ago. Yeah. And Sabi I met at the T-Mobile in Eindhoven. He was my side job. His as well. Selling phones, accessories, contracts in a shop. It was quite interesting, right? So you learn a lot about people, and because every different kind of people comes to the telephone store, right? Mm-hmm. And so that's like people management skills, now version 1. How to deal with all kind of different questions, sales 101. So it's actually a really nice job to start in.
Mm-hmm. Yeah, because you're the gang is the all international business kind of background, business background.
Yeah, so actually I was the only one that finished the studies. So I did that's why I'm the CEO. I did the Sabi did like 6 months of studying, but it's not for him. Mm-hmm. He's more of a practical guy, more of a sales oriented person. He's like studying. That's not my thing. And Bas only needed to finish his thesis. On he's doing business economics or accountancy or whatever you want to call it. And it took him 6 years to realize he's never going to finish his thesis until he quit the school. So he paid the 2,000 euros, college money for over 6 years. It was quite I bullied him a lot with it. It was funny. So it was a good time. But so I'm the only one that finished the studies. I'm also not somebody who likes to study. Mm-hmm. It was a bit boring. Therefore, we actually started an online store because we were board, mm-hmm. and that kind of escalated, right? So the thing grew. So we're selling phone accessories. The thing grew 30-40 orders a month, a day, and
50k in revenue even.
So first year was 50k in revenue, but keep in mind these things cost 20 cents, and we sell them for like 10-15 euros. So we were very rich students.
Pretty good.
But we never actually took any money from it. So we kept all the money in the business, and eventually we used all of the money we made there and invested it in Sendcloud.
Mm-hmm. Yes. Yeah, because also back in those days, while students, of course, a lot of students say like, "Oh, I want to make money and stuff," but like you just started with this. Yeah. Was it just like a random idea, or did you like
kind of
several?
Boss came up to me and he said to me, "Rob, there's this thing called Groupon, and we should do a Groupon deal." Okay, yeah, why not? Yeah, there's like these iPhone 4 docks, small. You can put them in. They were really cheap in China. He said like $1, and you can sell them for 14. And we do with Groupon a deal. If we sell them for 8 or 5, we sell 1,000 of them. Nice, 500 euros each. Mm-hmm. Then we called Groupon. A boss called Groupon, and they told us you need a business. Mm-hmm. Oh shit! Okay, you need a business for that. Yeah, no. Next day, Chamber of Commerce, call Groupon again. We have a business. can we now do the deal? No, you need an online store. God damn it! So then we actually like, okay, then let's do this more seriously, right? So that's how we kind of rolled into it, and then started the online store, started building it more seriously, purchasing stuff, having a bit of a warehouse, right? Mm. And yeah, that's how we started with the online store. So it wasn't like, it was actually a really simple plan. So it's really small, start small, and then it kind of grew from there.
Mm-hmm. So it was like online store, study, and also the T-Mobile kind of
yes,
all the sales work.
All the same. So it was actually a really nice time. Juggle a lot of different things. So we used our T-Mobile money to fund the online store, and Bas worked somewhere else.
Mm-hmm. Also sales, yeah.
Yeah, but he did sales for more of an advisory thingy, selling TVs or something in MediaMarkt. And we ended up drinking, every single one of us in Eindhoven city center every Friday evening and Saturday, talking usually about business or how to scale something or So that was a good time.
Really cool.
Busy though.
And you and Sabi were in the same T-Mobile team, yeah?
Yeah, in the same T-Mobile store. The first time I met Sabi, the guy had really slick back, long hair, shining, gold chain. It's like, what the fuck, who's this guy? And then I was like, it's probably like a douchebag, you know? So I shouldn't say that, but that's what I thought. And then I worked with the guy for 2 times, like, that's actually a really nice guy. And then I learned a lot from him because people were literally in line for Sabi. They only wanted to be helped by Sabi. So like, what the fuck, how does he do that? He really has something special with people and relationships. And then indeed we kind of became friends, went out drinking. He had an online store, we had an online store. So yeah.
Well, I heard he doesn't have his gorgeous hair anymore.
Yes, yeah. No, it's growing back. It's growing back. So we had a bet, right? So it's not good actually. We had a bet. So if we would raise less than 100 million, I would grow my hair as long as Sabi's, which is near to impossible, right? So that will be fucked up. And if I won, Sabi would shave his head. Luckily, it's for the good of the world that I won, and Sabi has no longer hair. Yeah, he found it really painful though.
I can imagine.
Which makes it even more fun.
That's really
but it looked good. It looked good.
Yeah. And then three of you.
Yeah.
Started working on the Sendcloud because the shipping back in the day was really shit. Yeah, basically.
Yeah, so shipping was really crappy. So you can imagine, right? So I was lucky not doing the shipping. So Bas was doing it. I did it sometimes when he couldn't. So you imagine we go to our warehouse thingy. There are thousands of phone cases, and we need to pick or pack 30 or 40 of them. So how it used to work is like there's in our system, we know exactly which orders are there to be picked. They're all paid, they're ready, and then we needed to, for example, pick it, pack it, put it in like an envelope or a box, and then print the shipping label. That was copying and pasting into from our online store to a Windows program with the Dutch Post or an online portal of DHL. That was already annoying because you also need to do size, weights, email address, phone number, so lots of shit. Copy and paste it. Need to go through like 3 steps to get a shipping label, and then in some cases you would still need to go to the store and pay in the store. So you get a receipt, tracking code. You get the tracking code in the store. You fucking fill the tracking code in your online store. It was stupid. So at one point I was like, "Yo, we can automate this process. Can't be that hard." And then we kind of started there. Yeah. So I wrote a 15-page document on how to automate it and what kind of platform it should be. Went to a good friend of ours and said, yo, can you build this? And the guy's like, well, I never built anything like this. I built a website, but I can try. It's interesting. And 3 weeks later, we were in our MVP, right? So we had a Magento connection to the Dutch Post, and it started from there.
And all that for a crate of beer?
It was an iMac screen, eventually, a crate of beer and 50 euros. That's how we did it when we were students. And that was iMac screen was expensive, like 1,000 or something.
Not bad. And with this first product then, I guess you didn't get all the clients right away?
No, it went slowly, right? So because you have a kind of a niche, which is like, okay, Magento is a online store system connected to the Dutch Post. So you will only get these customers. We could only ship inside the Netherlands. You can't imagine today, it would be totally ridiculous, but you can only ship inside the Netherlands. And but it worked quite well. So we just called customers saying, yo, you probably have this problem. We have the same online storage system as you. How do you ship your stuff today, right? And then they're like, yeah, this. Oh, how about A, it's going to be cheaper, B, it's going to be way more simple, and you save a lot of time. Why not? So we got a lot of customers in that way. And also, of course, I think it would probably still be there somewhere. I did like a beta test thingy of our stuff on a e-commerce forum in the Netherlands, and also there we got quite a lot of customers and feedback. So you can see our early feedback on our platform. It's still there somewhere.
Really cool.
Yeah, it sucks. Yeah.
And but it was so early. So how did you keep up as well? Were you just working on 24/7 as young guys?
Yeah. So we had. I never really went a lot to the university, right, to the school. So I was kind of parked that a bit. So I worked a lot on the store. I think that was priority number 1. Then I also did the T-Mobile stuff, which was kind of priority number 2. And then also we still had to go out with friends and have some fun as well. So we were busy. I wouldn't say 24/7, but usually from let's say 8 in the morning until 10, 11 in the evening. But it was fun, right? So we did it with friends. It was nice. We had a beer at 8 or something, and we still worked a bit. So it was a lot of work, but it was enjoyable. Yeah, maybe I'm thinking about it now more positively than I thought about it then. Romanticize the time. Yeah, sometimes it was hard work.
Yeah, I can imagine.
Yeah.
And you also joined like an incubator, yeah?
Yeah, so after starting 2 years into the business of Sendcloud, right? So we were having quite some revenues, things were growing, and then at one evening I came across like incubator or accelerator. I was like, what the fuck is that? I have no idea. So I looked it up, started a bootcamp, seemed interesting to me, checked it out a bit. I was like, I'm just gonna send an application. Did that, got a call, and then I was like, okay, you know what, you're invited to Amsterdam for pitch days. And like, pitch days, what is that? Okay, we Googled it. Okay, good. Hey guys, we're going to Amsterdam. Nice. We didn't have any slides prepared. That's just how we did things back then. Today it's more professional. Yeah. Didn't have any slides prepared. We went into the city because, Amsterdam, nice. Yeah, we can go in the city, have some drinks. Escalated a bit, so we came over to the pitch days. Massive hangover.
Classic.
And then I remember we rock, paper, scissors who did the pitch. Boss did the pitch. And I remember the comments. And the comments were like, I don't know exactly what you're doing, but you're having revenues. And we really like that. And we didn't have slides or anything. Okay, good. So we kind of rolled through that. And we went back, we passed the first pitch stuff. And that's how we kind of rolled into the accelerator. And I remember saying to Bas and Sabi, we're never gonna do that. We're never gonna give equity for this much equity for an accelerator. But then I think back then the founder started bootcamp, Patrick de Zeeuw, it made us kind of reconsider. I remember him calling us when we were saying, we were sitting like this on a video call. I was like, we're not gonna do it, guys. And then he would call us, he was super enthusiastic. And then we were like, oh, yeah, see you in Amsterdam. So we did it anyway. So I kind of rationalized it for ourselves, like, okay, if you want to get an investment round, it's better to have a massive interest. So the 8% of equity we then gave away, we kind of got back in the first investment round. Otherwise, we would have probably diluted way more for the first capital. And back in 2014, when we did the acceleration program, it was still quite, how should I say, there were not many. And it was still quite a good club to be in. And for example, we had during our demo day 44 investors wanting to invest. Yeah, that's what you want.
Sick.
And then you can negotiate very well. So that's how that formed a bit. So the acceleration program was actually really nice for us. We learned a lot. We didn't know about investors. We didn't know about convertible notes, how to structure, how to pitch. I really hated to be put on stage. So learned a lot of stuff over there.
Just in between, I guess, because a lot of people, like also young entrepreneurs, ask like, oh, should I like join this accelerator incubator? What's your opinion?
If you're a first-time entrepreneur and you never raise money, you don't have a lot of advisors, or you don't have some people around you, I think it doesn't hurt. 8% equity is a lot though. So if less is better. And also not all acceleration programs have the same level of quality. So back then, the Startup Bootcamp still had the founders of Startup Bootcamp were in our program actively working. They were super connected. That really helped us a lot. Yeah, it depends on the quality of the program, how much equity, and your own experience, right? So for us, it was I think it was a good move.
Okay.
Yeah.
Under 8% though. Yeah.
Yeah,
And,
preferably. Yeah.
And with the angel investors, how did you? What was, because that was the next stage. How did you pick them? What was the criteria?
So we first always look at, okay, what kind of people are they? So are these nice people to work with? What if we blow up and ruin their money, right? So we first looked at the people. Then of course there's like kind of value add. So can they add value? For example, one of our first angels was the ex-CFO of Ziggo. So that helped us a lot in structuring our financial planning, making proper forecasts, professionalizing the finance area, which was good. That was the second. And of course there's also valuation. How much equity do they want? What's the amount of money they can put in? Can they invest another time? So these are all the other considerations you have. But we really liked the two which invested in us at the start. And of course we could pick a lot of them because we were in the startup bootcamp. So we're actually really happy with them. They're still actually shareholders.
Still?
Yes.
Wow.
Yeah. So they're actually, I think they're quite happy.
Pretty cool.
If I look at their returns, it's 1000x.
Fair enough. And I guess they'll still stay because this probably is going IPO at some point.
Yes, the goal is to IPO eventually, right? So I think today the market is not open to IPOs, right? But I believe in 25, 26 we will, we're gonna aim for an IPO.
Sounds cool. And I guess you kept growing, you kept getting revenues. At some point, should we take VC in or should we not?
No, this is interesting. So once you're on the investor IV, I call it, like, then it's very hard to step away, right? Because you're living, you're expending more. Your costs are higher than your revenues because you keep on. You're on the IV. That's what I usually say. So once you have the first round in, there will be a next round, and there will be a next round. Unless you choose, right? Okay, we're gonna maybe slow down our growth. So we actually burned cash. We needed another round. That's how simple it was. Burning cash. We need another round, or we need to slow down. And I don't like to slow down, so I want to grow fast. I want to be the leader, at least back then in Europe, but today I think in the rest of the world. So slowing down wasn't really an option for us, so that meant more money. So we did, I think, consecutive six or 7 rounds in total, which is a lot. Yeah. So and the last round was of course then SoftBank and Accelerator, which came at a really good time. Peak COVID, e-commerce exploding, volumes exploding, revenues exploding. So then you can get a really good valuation, really good investors, and really a lot of money. Before we struggled a bit always, right? So we always raised, and there were always good investors and good people. But it's not that we had 15 investors lined up. Here's a term sheet, Rob, you pick, and we had like 2 or 3, and then usually we spoke to like 40, right? So it's not always that it's really good, really easy. And we usually also got less money than we actually wanted. So I set out to raise 3 million, for example, and we end up with 1.5. Not that it's bad; it's a lot of money you can build, but your plan is 3.
I guess that's the usual advice. Is always like ask twice, the double what you need. Yeah.
Yeah, no, I wouldn't say actually. Ask what you really need, because they will see, right? So they can look into your financials. It's like, okay, yeah, why does this person need 3 million euros? Doesn't make any sense. So ask what you need, maybe, and then if it's a competitive investment process, then you can automatically get more. You can get more. So if there's like 7 or 8 of them wanting to get in, they'll be like, yeah, can I put in a little bit more? Or it's a different dynamic. So I wouldn't over raise or anything.
Which round was most difficult for you to raise?
I think was it the Series A? I don't know how to call it, but it was like Series A. I think where I wanted a 3 million, got a 1.5, and then how should I say? We ended up not paying ourselves for 6 months because we didn't want to tell our people. We could see it coming, right? That it would take a long time, and we did quite some financial tricks to stay alive, just because we knew the round was coming in, but it took longer, and the investors know that, right? So they feel a bit, they're kind of they're gonna need the money soon. They also see the P&L, they do due diligence. That was a really hard one actually. So and also one deal fell through, which we expected to sign. So that was a hard one, but eventually we figured it out. But the early rounds were always quite hard actually. And also in 2014, 2015, there was not a whole lot of VC money still, not large funds in the Netherlands. The Americans were not investing here. So it makes a large difference. I would say the situation which you had in 2020, 2021, it was extremely good for entrepreneurs. I would say today it's the pendulum has swung back a bit to the power of the investor. So, but that used to be the case when we were raising these smaller rounds.
And then that Series A, when the most difficult one, what would you like change that? How would you change the approach, like with that current knowledge, to make it easier?
I actually don't know if maybe we should have raised later, that we had more revenues in. So, and the round before we should have raised more. So we raised $500,000 before, and we just burned to that in like 7 or 8 months.
Damn.
Yeah.
So nothing changed.
Maybe it's also spending less at that time, right? So it could be spending less, so extending the runway to get more revenues in, so that you can raise a larger round easier. Yeah, I think, and also we were doing something that wasn't really hip back then. So everybody wanted subscription revenue, so monthly recurring revenue. We were doing basically transactional revenues. So that means every shipment going through our platform, we would make, let's say, 50 euro cents. And it's like, yeah, Rob, this is not recurring revenues. I could show them, these are recurring revenues. These customers are sticking around for years. And actually these revenues grow over time. So year on year, we would make more revenues from the same customers. Ended up having lots of discussion about that. So our multiples were lower than a subscription business, while our metrics are better than a subscription business. So
you still pivoted later, yeah?
Yeah. Eventually we solved it later, but I mean today we did at that time they were like, oh, this is outside of the box. The normal metrics don't really apply. We don't understand how to value this. So lots of investors were like, yeah, we don't know. So and some did, right? For example, Jan Andriessen from Henk, which is a Dutch VC, he did, right? So he understood it, which also helped us a lot. So we did, I think, the round after the round for $1.5 million, we did one with them, which was really good. And after that, it went smoother, I would say.
And the first VC round, because you are still like first-time founders. And of course, with angels, it's kind of a bit easier, it's chill. But like when VC steps in, things get a bit serious. It's like the next level. No,
we always with the VCs we had were already chill, but also maybe because we were growing fast. So they were chill. They let us. They challenged us when needed, but not really. They were not really strict. They're also just people.
So no suits on all of a sudden?
No way, no suits. No, never. So, but also the VCs don't wear suits.
Yeah.
Thank God. So, no, they were actually really chilled. So, as I said, we check the people as well. You don't want to have shitty people on your cap table. We don't have those, but I mean, it can be a real pain in the ass later.
That's a good one.
Yeah.
And did you have any shitty people? If you did, how did you like kind of get rid of them, or?
Very much. No. You look. We didn't have shitty people. We did, however, at one point was an early investor, which kind of closed down their fund. So we did buy them out. So we did it in a really smart way. So let's say they invested $500,000. We've said, you know what? We'll buy this stuff for $800K. 2 years later. Okay, they were agreeing with it because they were closing their fund. It's 40% return. Why not? And at the same day, we sold the same package of shares, so we never lost any percent on that one for $2.5 million.
Dang.
So it's kind of free. Yeah, that was really one of the best deals.
That's a good one.
Yeah. So that's how we got them out, but they were not annoying or anything. They were just closing their fund.
Makes sense. Show the numbers, yeah.
Yeah.
And SoftBank and you, how did that come together?
So we, after having a really great 2020, 130% growth or something, of course on the back of COVID, right? We were like, we don't necessarily need money, but best time to get money is when you don't need money. So we said, you know what? I had many discussions with boss about this. We need to raise money now, boss. And boss, no, we don't need money. Do it later. And at one point in April, he agreed with me that it's a good time to raise money. So we set out to raise money. For the first time in our history, we used an external advisor to help us. Because this was a big round, I had lots of stuff going on, so I couldn't run the entire process. Boss was really busy. So an investment bank from London helped us raising this round. And of course, I keep in touch with lots of investors for a longer period of time. And eventually they went quite smooth. So we went from like 30 people in the process all the way up to, I think we had 9 or 10 different term sheets in a period of 2 months. So lots of pitches, and then of course we could choose. So we chose SoftBank and Accelerator. SoftBank because for reasons they were nice people, they have deep pockets, they can do another investment. Their logistics and e-commerce portfolio is massive, so really interesting. Accelerator is a second fund. So SoftBank did 100, Accelerator did 50, and they are really big in e-commerce. So they have, for example, they're owners of Birkenstock. Their biggest LP, which is the investor in the fund, is the LVMH family, with Louis Vuitton, all those brands. So they're basically an entrance into more luxury, high-end retail for us, and also the people are really nice. So those two combined were the best choice for us. Of course, also there's valuation and all the other stuff, but yeah.
So you also look at the portfolio as well?
Yes, of course. That's really important, right? So if there's a portfolio of which is really good in e-commerce or really growing brands which you want to get in, there's no better entrance than a VC to CEO kind of entrance. Super nice. Yeah.
Would you recommend like using an external advisor then to kind of do the round?
Not on the early stage. So I don't think you should do that in an early stage. You do need advice on if you want to close an investment. I think you can use advice from people that did it before, right? So how to run a decent process, but I wouldn't pay them for it. And also these advisors, the good ones, they don't come in for 1, 2, or 3 million because they get a percentage on the deal, right? So they come in for 50 at least, the good ones. I shouldn't say that, I might insult a lot of people, but
we can cut it out as well.
Yeah, no. No, but the large ones come in with larger amounts, I would say. But I would do it yourself. Get advice from people who did it before. So talk to people who went through a couple of funding rounds, and that should be enough in the early phases. Also, there's a difference between European investors and American investors. Usually, American investors find it really weak if you, on an early stage, use an advisor, because they think the only value is the team, and the team that is not then presenting the business. It doesn't make sense. So I would not do it at the early phase. Yeah, all the way up to maybe starting from 10 or 20 million, then you can use advisors. Yeah.
And where's the ambition coming from? Because unfortunately, a lot of Dutch startups, they make a kind of big business and then they sell it off and then want to chill out. But you really going for it,
Yeah, look, it's interesting to learn new stuff. So, and how often can you do this? So, as long as I really like what I'm doing and I'm continuously learning, then I'll keep on doing it. And if not, then replace me, buy me out, whatever. Also, if I become incompetent, right? So if I become a real, let's say there's 1,000 people and it's a total shit show over here, then I should also be fired. But no, where the ambition comes from is just I enjoy what I do. I learn a lot of new stuff. So then why not continue and try to build something which is really big?
And you have your boys with you as well?
Yeah, look, my friend Sabi and Bas are still good friends of mine, so they're still in here. That also makes a lot of the fun, right? So I find it really hard. I wouldn't be able to do it on my own because you cannot share the highs, right? So maybe you did a really big deal, who you will, it's not the same. Or the lows, right? So you're a really bad quarter, shit failed, good people leave, whatever. There's nobody to share that with, and it's really tough. So I really enjoy being with three, and that they're still all in. Yeah.
And how did you handle the growth of the company? Because it was at some point over 5,000% growth. It was from 3 people to 500.
Yeah. So how do you handle that? You don't actually. You go with the flow. So you learn while growing. in all honesty. It's not like, let's grow to 500 people. Have no clue how to do it.
Yeah.
So you do your best, you try to hire the first leaders eventually, and those will fail because you don't know how to hire, you don't know how to manage them as well. So you get up and you fall down, you learn by doing, you try to get some external advice here and there, or wherever you can, read some books and maybe check out some podcasts or YouTube videos, but I'm very stubborn sometimes, right? So you learn through doing. Even when people tell me you shouldn't do that, it's a stupid idea, and I'm gonna try anyway. Let's see, right? Usually they're right, and but then you learn.
Yeah.
So I would say just go with. There's no such thing as from 3 people to 500, and I had it perfectly planned out, and everything panned out the way I wanted. No way. The growth line is never straight up. It goes with ups and downs. So you just go with the flow. That's how I consider it. And you learn, you can do this because it goes quite slowly, right? You're in this every day. So if you go from 3 to 6, that's doable. You go from 6 to 12, that's doable. From 12 to 24, okay. But if you go from a situation where you manage 10 people immediately into a situation where you manage 150, forget about it. You can't, you have no clue. Or at least, I don't think you can. So because we are there during the entire growth phase, you can scale with the company.
Yeah, because I think you built pretty nice culture, because it's a shipping business, so it's not like something crazy, but you still like managed to like make it fun and like cool and all of that.
Yeah, but that's of course also due to the people that are here, right? So I wouldn't say that's just me. So I think the when we were really small, we already had fun, right? So it's just how we founded the business. Nice friends, we have some fun, we have a beer. And that kind of stuck around. So it still is the case that it's quite fun. Yeah. Of course, you have lots of different people here, right? So there are, I think, 65 different nationalities. There are not 500 people every Friday afternoon drinks, basically, right? So there are maybe 100 or something, or 80 or 50. But I believe it's really important for people to have fun while they work, to work with nice people, to have a nice challenge. And then it's less about the money as well. So you can always get more money somewhere.
True. And you yourself, now, actually, how did you keep the focus as well on the core business? Because it's kind of, Or
I didn't. Okay. So of course, now I feel like I'm way more focused these days than I was. But the downside, I think, of being an entrepreneur is that you see lots of opportunity. So there's this, well, we can also go here, and also this, all of them could be really nice businesses. In some cases you overstretch. So an example of that would be our internationalization. So we went to Belgium. Belgium is small, we should never have gone there. Sorry for the Belgians, but I mean, that was not smart as a first country, you need to go to a larger market. But the B-Post back then asked us, like, what you're doing in the Netherlands is really nice. Can you come do that in Belgium? Well, sure, why not? So we kind of went. But then we went from Belgium to Germany before we were ready with Belgium. We went to France before we were ready with Germany and Belgium. So we kind of overstretched, and because there was everywhere opportunities, right? And there were customers asking us, carriers asking us, platforms like Shopify or WooCommerce asking us, so like, oh man, we need to really go fast. But then you never really go deep in any of these markets, and you don't fix the lingering issues, which kind of limit you a lot on achieving success in these markets. So that's an example of how sometimes opportunism and getting to the next opportunity is, I would say, actually slows you down to a certain degree. So I think we could have been bigger if we went slower, revenue-wise.
Right.
Yeah.
And I guess you had people to kind of, I guess you didn't, to kind of stop you.
No, I'm stubborn, right? So it's like, we can do that. Don't be such a negative person. Why? We're not a big corporate. We're not gonna be so slow. And yes, of course, I had people telling me it's not a smart idea.
Nice.
Yeah. Also, investors like, Rob, you sure? Very sure. Okay. Yeah.
Fair enough. Well, and you as an entrepreneur yourself, how do I guess nowadays you don't just do work 24/7, you also have other things? in mind, or?
No, that I'm quite focused on, right? So my main thing is growing this company.
Mm-hmm.
I don't believe in this is also maybe gonna sound weird. I don't really believe that you can be building a company this big and then either do another company or do startup investing or do. I believe that you should do one thing really well. Of course, I have other things, right? I do sports. I like to mountain bike. I like to run. I do whatever. I like to read, barbecues and stuff. But the main thing is growing the business.
Mm-hmm.
So it's a singular focus, I would say.
Cool. And any books to recommend if you like to read? Like maybe top 3.
Top 3, hard ones. I liked. I think maybe one of the more recent ones I read. I liked. No Rules from the guy from Netflix and Reed Hastings. Not everything, but I liked the idea of this culture, right? So freedom, responsibility, pay top of the market. You get the best people. The best people will run the business basically for you. I recently read Amp It Up, right? If you look more, it's also nice. Frank Slootman. It's a bit commercially written, right? So, but I also enjoyed the story of Snowflake and ServiceNow. There are actually many nice books. The Hard Things About Hard Things is nice from Ben Horowitz. Some of it is a bit overdone, but I also like to read goddamn it, I forgot the name. Amazon, the latest book about Amazon, how it got really big.
Yeah.
I think Brad Smith wrote that. And if you ever want to raise venture funding, I think a book which you should read is Venture Deals. Mm-hmm. It just contains like the basics, all the terms. It explains to you in a really nice way how to raise funding and how not to get screwed over and what a ratchet is and why not to sign that and that stuff. Yeah.
Cool. So you're really trying to learn as much as possible still.
Yeah, but also I read a lot of other stuff, right? So of course there's business books, but also lots of other stuff. I have quite a broad interest. I recently read how the world really works from goddamn it, the guy's a hard name.
Roberto.
His last name is Smil.
Oh.
It's a scientist, and it's about energy dependence on fossil fuels. How we cannot couple ourselves loose in the coming 20 years of oil and gas. How food is produced. It's quite interesting. Yeah, so worth a read as well.
Cool. And then I guess last two things is a quote maybe you have in your head, live by, and like an advice to maybe other entrepreneurs.
Yeah, no, but the only thing I always think, if you're an entrepreneur, you should just do it, right? Go for it, try. You learn once you're doing it. Don't write big business plans. Just, especially in the early phases. Fuck it, what do you have to lose?
True.
Nothing. Time. Yeah.
It's okay, yeah. Do you guys have any questions?
Oh, that's good to know.
Where did the name Sendcloud come from?
Yeah.
Because the first time I heard the company, I was like, is it email marketing business?
Good, excellent. Yeah. So this is also a nice one. So me and my brother, my brother's more or less a marketing guy, right? So we were in back when I was like 18 or something. We were like, fuck, I need to name this company. I have no clue how to name it. Something with cloud. It's in the cloud, right? So Ship Cloud. That sounds too much like shit cloud, right? So we can't do that. People will bully us. So send, ship, parcel, whatever. We wrote down all the stuff, and eventually we got like, Sendcloud. The domain is still free. Not the .com, by the way, that was reserved, but all the European ones were there. We eventually bought our .com from a guy from China who asked 200k, and we negotiated it to like 20k. And to annoy us, he put like a porn site on top of that. So I remember, this is actually a real story. A German investor in his investment committee talking about us pulled up Sendcloud.com.
No.
So that was really bad, and then he got an email from the guy saying, I'm not investing. Number one, get your .com domain. You can't have this. It's a disgrace. Change your name. That's what he said. Yeah. So we just figured it out. And there's no like, it just came to me. No, we just wrote down a couple of names, and we found this was the best one. Yeah. But I agree, it sounds like email marketing or SMS or whatever you want to call it. Yeah.
Really cool.
Nice.
Yeah, well, weird that Germans didn't like the porn website, but okay.
It really happened. I think if you go in the Wayback Machine, you might see it. So enjoy.
We'll check it out.
It was a smart move of the guy, because eventually it got really annoying, right? It's like, God damn it, this guy just cost us an investor, right? So it's like I was pissed off. So we need to buy this stuff, and eventually it's good that we did.
Hilarious.
Yeah, I really just disliked paying 22k to a domain troll, right? It's like, ugh. But yeah, the guy probably is really happy with it.
I'm sure.
Yeah. Nice.
Cool.
Cool.
Yeah, that was it.
Thanks a lot. A lot of fun.